We all know how to get into trades, we might know how to structure risk, but how the heck do we manage those trades? What's the best trade management style? In this video, I'm going to be breaking down 3 different ways to manage your trades, everything from fixed take profit and stop loss, scaling out in profit, and trailing stop losses. We're going to take a look at the differences, the advantages and disadvantages of each, and do it live with you guys back testing so we can get some examples here. Before we get started, want to let you guys know Top 1 Futures is running a 55% off plus anytime payouts sale. Use code RDF if you want to check out my preferred instant funded prop firm, no evaluation, straight into a funded account from day one. Check it out right here. I'll link it as well. All right, guys, here we are on TradingView on the ES chart, and I like to learn by example, watching the stuff play out right in front of me. So that's what I'm going to do. I'm going to describe each of these different trade management styles and then give you multiple examples so we can watch maybe some advantages or disadvantages of each play out in front of you. You can watch how it might happen in real time, although this is just in replay mode. So first up, we have the fixed take profit and fixed stop loss. So let's go ahead and say we want to take a buy here on ES. What would it mean to have a fixed take profit, fixed stop loss? Very, very simply, take profit and stop loss are fixed, right? This would be where we just enter the trade and we let it run to either a take profit or stop loss. Some basic advantages of this requires minimal effort, right? So number one, you don't have to babysit the trade. You don't have to continue to adjust stop losses, scale out, any of that type of stuff. It can be great for swing trading. It can be great for busy traders that just aren't able to stare at the chart and manage it after they put the position on. It can also help with people that are struggling to hold on to their trades, that are mismanaging their trades, right? So if you're somebody that puts trades on and then, continues to mess with them, closes out in profit, in loss, moves things around, adds in and out, moving to a fixed take profit, fixed stop loss might take you out of that. Now, some obvious disadvantages are as you get more experienced, and I'm just going to play a couple of these forward. We can watch kind of how they play out. As you get more experienced, you might be able to say, hey, you know what? I saw it break a level of structure down here. This one just went and hit a stop loss. I might have wanted to close early in profit, or I might have wanted to start to scale out in profit at certain key levels where price is moving above or below, levels of structure. It doesn't allow you as much control, right? Because you're just putting the position on, and we'll do a couple of these. Again, I'm hitting a buy here. I'm not, we're not backtesting anything other than to just show you what this looks like. So this would be like a 1-to-1, for example. We could have opportunity within the trade to make an educated decision and say, hey, you know what? We don't want to be in this trade anymore. We want to move stop loss to break even, right? So those are some clear disadvantages of a fixed take profit, fixed stop loss. Another big advantage before we move on to the next one and kind of just keep the show rolling, if you have a fixed take profit and fixed stop loss and you say every trade I'm going to run, let's say a 2-to-1 risk to reward, right? You're able to track this stuff really, really cleanly. You're able to understand that every trade is managed exactly the same. You're going to create a really, really clean risk to reward because it's not going to be an average. It's just going to be fixed, and you'll have a win rate that corresponds with that risk to reward. If you are more dynamic, if you adjust, if you scale out, scale in, if you move stop losses, if you trail stop losses, it does become more difficult to track that data, again, because it changes on a trade-by-trade basis. So you end up with more of an average risk to reward, average win rate over a large sample size. So another advantage of running a fixed take profit, fixed stop loss would be, there we go, stop out, there would be tracking, ease of tracking. So let's move on to number 2, right? And this is going to be scaling out in profit. Multiple take profit levels where we're looking to scale out of the trade. So for the purposes of this example, let's say we want to run 2 scale out plan here. You could do this many, many different ways, right? But for this purpose, we're going to put 4 contracts on. We're going to put a $2,000 stop loss, right? And the game plan will be if we move $2,000 in profit, we are going to scale out of half of the position. And the final close will be at a 2-to-1, which would be $4,000 in profit. So let's just go ahead and start to play this forward. You can see how this might differ. Maybe the advantage and the disadvantage we'll talk a little bit about. So let's see if we can start to move into profit, or if we take a stop loss, we'll put another couple of them on. Okay, stop loss. Let's throw it on again. We'll buy 4 of them. See if we can get this to play out in my favor. Again, just randomly backtesting here. But the game plan is if we move, right? Here would be a 1-to-1. We can use a position tool just to display this. If we move to this level here, we're going to close half the position and we'll move stop loss to break even, right? We can watch how that plays out. And this would be scaling out in profit, right? We are opening a position with 4 contracts. We're looking to close half at 1 take profit and then close half at another take profit. And we'll say move stop loss to break even on the first close, which is the common way to scale out. The benefits of doing this, if we can get one that starts to play in my favor here, the benefits of doing this are, number one, should I hit sell yet, guys? I'm just going to keep hitting buy and we'll keep going. Would be, number one, if the trade doesn't continue in your favor, you've secured some profit, and then when it comes back to break even, you are able to, close the trade. It's like you're leaving on a runner, right? Because if it does continue moving in your direction, you do have that larger take profit level. And if you just hit, maybe that 1-to-1, you've taken some profit. So it's kind of a happy medium in between leaving the entire trade on and allowing it to continue to just run with the risk of it coming back to stop you. Okay, so we made it to we did make it to a 1-to-1. We got close enough. Looks like we're just going to keep taking stops. Can I even demonstrate this one? Okay, let's just play this forward a little bit more. Maybe let's get to the point of the market where we're not just selling off rapidly. All right, so game plan would be scale out. Let's do it one more time, and then we'll have to adjust. 1,000. Yeah, let's do this. We said 4. We're going to close 2. This will be the 1. It will go like 3 and 6. Can we get into profit by a little bit here? Back up towards VWAP. Okay, we're approaching that level where we would want to take some profit. Okay, so let's say we get close to that 3. There we go. Perfect. So we're going to go ahead and scale out, finally, after taking multiple losses and running up ourselves into drawdown. We are going to sell 2, right? So we would close half the position, secure that half, and then move stop loss to break even or maybe just past break even. Now, the benefit is if this runs back to break even, we secured some profit and, we don't sustain letting a winning trade turn into a loss. If it continues to take profit, well, we left some on. We didn't close the whole piece out here, but we didn't realize the full $6,000, right? If it reaches take profit before coming back down to stop loss. So that would be kind of the drawback. So in this case, that didn't help us, right? In this case, leaving the full position on would help us. And the bottom line with some of these, we're going to go through the last one, which is interesting, trailing and profit. The bottom line with this is it's going to be different for everybody, right? And we can go through some other just quick basic examples, but the best for you is not necessarily going to be the best for me, right? And the best for somebody else. Your data is going to show you what's the best, right? You're going to say, hey, when I hold on to a lot of my trades, they come all the way back down to stop me out or come all the way to stop loss. I should be moving my stop loss to break even and closing some in profit. You might say, man, anytime I try to touch a trade when it's on, I mess something up. Maybe fixed take profit's going to be for you. Maybe you get in with trends and this last one's going to help you out where you want to start to trail stop losses really aggressively in profit as the trade starts to develop. So that's what we're going to do here on this last one. We're going to run no take profit, literally no take profit, and we're going to have a stop loss hit, hopefully in profit. That's going to be the way of exiting the trade. This has some obvious benefits, which would be as the trade starts to move in your favor, if it moves in your favor without just coming to stop you out. Let's see if we can get back down towards profit. Okay, great. As it starts to move in your favor, maybe you aggressively trail behind, 1 minute candlesticks and you say, I'm going to only be stopped out on a trade either for a full loss or in this case, as we started to reduce it, but we're going to let the trade run. We're going to let the trade continue into profit. So, okay, great. So we say, we're not going to close the trade here for $1,000 profit. We're going to trail right behind 1 minute candles. And that could be our trade management style for this. We could say every 1 minute candle that forms in my direction, I continue to trail right above that next 1 minute candle. I get stopped out in profit on these trades. Boom. We continue to let the trade run. If it dumps in our favor, we really are able to capitalize on a large market movement. There we go. Continuing to trail down. This was a good example. Don't have to take 47 stop losses on this one to get something that moved in my favor. The drawbacks here are obviously you're not letting the trade breathe. You're not allowing for a lot of movement back and forth. Oftentimes with this, you will take a lot of stop outs quickly and then the trade will continue to move in your direction. But it can be a great way to manage risk while allowing the trade to continue to move in your direction, right? Either to a fixed take profit, like maybe, you are still going to utilize this with a fixed take profit, but you're going to trail as well, or no take profit and just let the thing continue to move until it starts to move against you. Obviously, I'm just giving you one example here, which would be trailing right behind 1 minute candle wicks. You could trail above levels of structure, multiple different ways to do this. Obviously, this is very labor intensive. It requires you to continue to manage the trade, right? To continue to trail down into profit as the trade develops, right? We're going again like one tick right above all of these. You really have to be on your game. You have to be able to stick to this, right? It can be very tempting. Maybe we made, we were down so much and maybe we're now in $3,000 of profit. You want to close the trade. This is just a little bit of a practical type of deal. And you also have to recognize that another drawback, you're never going to realize the full amount, right? You're never going to take the max amount of that trade. You're going to allow it to come back on you and to trail you out. So we're going to keep going forward and maybe this thing just continues to dump. This is a pretty good example. I'm trailing behind every 1 minute candle as it's moving in my direction. Okay, great. They were finally stopped out in profit, right? But we allowed this trade to move all the way down, continue to move down. And if it did continue to move, we would still be able to capitalize on that. We just trailed behind 1 minute bars. So here's the thoughts on these three, right? We looked at fixed take profit, fixed stop loss, scaling out in profit and moving stop loss to break even. And then lastly, just trailing your stop loss into profit and allowing the trade to continue to move. Here's what I want you guys to reflect on and remember. There's no one best way to manage your trades. There's going to be a happy medium for you personally based on your data. And that's what you need to do in order to decide what's the best answer for me personally, right? Look at your data, review, decide what would happen if you did this, right? And one way to do this is to track multiple trade management styles within one spreadsheet maybe, or to just go back through as you review at the end of the day, the end of the week. What if I trailed my stop loss? What if I let all these bad boys run until I got trailed out? What if I didn't scale out in profit and I held all of them to one fixed take profit? What would happen if I moved stop loss to break even? You're going to get an average feel for what's best for you. Another really important thing to remember before we wrap it up, this is like key. There's not going to be a best every day. You're never going to get it perfect every single day. And if you decide to be somebody that lets your trades run in profit without moving stop loss, you'll have some days that come all the way back to stop you out, where if you move that to break even, you would have saved yourself that stop out. But your job is not to be perfect on every single trade. Your job is to do what's best in the long run. We know we're dealing with a market that's very random on the short term, very consistent on the long term, right? Our job is to look at our data over a decent sample size and decide what's best across, let's say, 100 days of trading, right? Should I be moving stop losses? Should I be scaling out in profit? Should I be trailing stop losses, or a number of other combinations, because there's almost an infinite amount of ways to manage your trades. These are three real common ones. And that's what you should look at. But as you maybe backtest this yourself, you look at your data, recognize you're not going to be perfect every day. And you will have days where another trade management style would have worked perfectly. But your job is not to get it right on every single day, every single trade. It's to do what's best for you, your approach, your risk management style, right? Your personality, what you can practically do based on whatever your limitations are, and just execute that. And then as you collect more and more data, review and adjust. You might find that widening out stops and targets help you a little bit. Touching the trade more, not touching the trade more, a million different ways to do this. So guys, if you found this video helpful, smash subscribe. I'm on here trading live almost every day, 9:30 a.m. Eastern. I do Top 1 Futures accounts giveaways. I'll plug that again. Code RDF gets you the best deals at Top 1 Futures. Remember, I am partnered. I am affiliated with them. I do trade with them myself. I think they're a great company, but I cannot stand to be unbiased if I stand to make money. Also, remember, guys, I'm not a financial advisor. None of this is financial advice. Trading is very risky. Most traders lose money. If you trade, you're probably going to lose all your money. I'm just an idiot here yapping on YouTube for entertainment purposes only. Do your own research, make your own decisions. Read CFTC Rule 4.41, which is what I do in simulated funded prop firm accounts and the simulated environment that those operate in, and the affiliate partnership disclaimer that I just mentioned that says I stand to make money from links and codes in my content like Top 1 Futures and code RDF. Talk to you guys soon. See you trading live.